Let me stick there. That is better. Is it okay? Tell me within that.
I have come to Bandra Center, IFA Center. That is the reason why the arrangement seems to be problematic here so far.
Yeah. Yeah.
No, no.
Am I visible and audible? नहीं चालू किया मैंने. Good evening, everybody. It's a pleasure to welcome all of you. We have got more than 100 registrations for today's meeting, and we also have a few participants. It's a physical meeting at the IFA Mumbai Academy. I welcome each one of you to this discussion on the taxation of the person's names in the Pandora Papers. The taxation on account of disclosures of persons or incomes of persons which was undisclosed or concealed in tax havens has been a matter of debate and discussion since a long time. We had one view that there cannot be any reliance on stolen data, and therefore the taxpayers were having a very good time. They were not required to, they could challenge that unless the person who has stolen the data can identify, I will not be bound by the data, and therefore I should not be required to pay tax on that. And now today we have gone to another extreme where courts have held that the taxpayer is not Mother Teresa. If she gets a huge sum just after becoming a non-resident, it is presumed that it is her undisclosed income and she is brought to tax in India. So that is a full change in the perception of the taxation of such persons. And there has been a lot of discussion about exchange of information, whether stolen information or information which is officially shared between the tax administrators between the different countries. At the outset, I will need to mention that one of the panelists today, Mr. Pramod Kumar, had to abstain today for some very strong reasons. We had a pre-event call with him a couple of days ago, and he was excited to be a part of the discussion, but he had some compelling reasons that he is not able to join us today, and we shall miss him. Our other panelists for today evening are Ms. Monica Bhatia, who was earlier part of the OECD, and she has got hands-on experience in exchange of information between countries, and we will be happy to get her views in the matter. The other two panelists are Mr. T P Ostwal and Mr. Mukesh Butani, and I don't think this audience needs any introduction about these two panelists. So I will straight away request Ms. Monica Bhatia to share a broad perspective of the policymakers and tax administration in respect of exchange of information, international perspective. So,
yeah, thank you very much, Nilesh. Am I audible?
Yeah, you are audible.
Audible. Okay. Firstly, thank you very much for inviting me on this forum to discuss a very, very interesting topic. I think it's a topic we've been hearing about for years and years. And my introduction to this topic goes back to the, even before all the leaks, I think the LGT scam and the HSBC scam that took place a long time ago. And that and the financial crisis of 2008, 2009, that provided quite an impetus for the change in international tax cooperation. Prior to that, the cooperation amongst countries with regard to tax data was limited to only to OECD countries. And most other countries were not participating in it. It was very sporadic and it was very, very limited in its scope as well as the quantity of data exchanged. So with the financial crisis that was taken up by, this issue was taken up by the G20 and the Global Forum, which I have headed for the past, for 7 years, not the past 7 years, but 7 years, that came into being in order to facilitate international tax cooperation. So initially the Global Forum worked on one standard, which is called the Standard for Information Exchange on Request, which is when a country makes a request to the other country on a specific case or a specific matter, and the other country has to provide that information. So that was the basic standard that was worked on for the initial 4 to 5 years. And in 2014, we saw the advent of the Common Reporting Standard, which was derived from the US FATCA, and we had the standard of automatic exchange of financial account information. So that began, the implementation of that standard began in 2017 when the first exchanges started taking place. And now it is about more than 100 countries that are exchanging information under that standard. Meanwhile, I guess the shortcomings of the existing standard also came to the fore. And for the standard for exchange of information request, the very, very important element of requirement of beneficial ownership information was added in 2016. Earlier to that, it was mainly that the country should know about the legal owners of entity. But as we all know, knowing the legal owners of an entity in another country is just one step. And given the layers and layers and layers of legal entities that are created in different countries easily, the key is to be able to reach out to find out who the beneficial owners or the what we used to call the warm body or the human being behind the layers of companies is. So the beneficial ownership standard came about in 2016. And so now I think the international cooperation has grown very, very substantially over the last few years. And to the extent that in the recent data that was released by the OECD, the exchange on request by itself has led to a recovery of about $7.5 billion as additional tax revenue for various governments. And if you look at the total number, the additional revenue that the tax corporation has generated for different governments is about 112 billion. And this includes revenue that has come through voluntary disclosure programs or amnesty schemes which different countries have brought in. And many countries did bring in these programs to allow the taxpayers to come clean before harsher measures were imposed. And so about 112 billion has been recovered there. Now, in terms of the extent and the volume of information exchange has grown exponentially. In 2009, I think there were about a couple of thousand requests being made globally. So that is the kind of number that we saw at that time. But in the last 10 years, that number has grown to about 20,000 plus. So because of all the agreements coming into force, because of all the changes the countries are making, the level of cooperation has grown quite far. And if you look at, I think everybody is always interested when we're talking about the topic of stolen data. I'll touch a little bit about that as well. But before I go to that, I just also wanted to mention that in automatic exchange of information of about 75 million financial accounts was exchanged in 2020 itself. And the assets involved in these exchange of information was worth about 9 trillion. So that is where the numbers lie. There is another question that always arises as to what does it result in revenue for the governments? What are the governments doing with this data and what are the governments doing with this information? But that's a separate question, and I guess we will come to that because some of the value of the cooperation also is in deterrence, that the taxpayers are aware that their information can be shared and will be passed on, and they come forward to declare their foreign assets or foreign listing. Of course, that also leads to maybe taxpayers looking at other avenues where cooperation or reporting doesn't take place automatically right now. So that's just the overall global scenario where the cooperation has grown tremendously. At the same time, of course, we have seen a series of leaks, one after the other. I think Mukesh will tell you about the series of leaks that have taken place. And but there has been a lot of them. And with every leak, there is, I guess, different stakeholders will have different reactions. But I'll tell you the perspective of the policymakers globally as well as the OECD in that. I think when these leaks happen, we at the international fora, we get both criticism as well as appreciation. I guess the criticism is that what are you people doing despite all of that? These kind of things, these schemes are, surviving and thriving, etc., etc. And what is the point of all that cooperation? So I guess different governments at home also, government representatives must be facing these questions. What is the point of these international cooperation when leak after leak after leak shows that things have not really changed? But at the same time, it also underscores how important it is to cooperate at this time. And again, going back to 2010, when the cooperation was not there was no way that a government could get any information from any treaty partner, or in fact, treaties were even not there. So what to talk of getting information? So you would sit silently, you would see this happening. And that struggle we saw initially with the LGT cases as well as the HSBC and UBS scams, where the government was not able to get information. And there was no treaty provisions, there were no treaties, there was no international standard. So there were different ways in which people tried, and most of it was not successful. But come, fast forward to now with earlier the Panama Papers leaking and now the Pandora Papers leaking, I think the governments are way more confident that they can take these investigations forward and take them to the logical conclusion. And in that, I think there was a statement released by the Minister of State also in India with regard to the credits that have been identified. I think more than 20,000 crores of credits were identified out of the leaked documents in Panama Papers. And after the Pandora Papers, the government of India has also set up a multi-agency group to investigate this, which comprises ED, of course, EDA and FIU and CBDT as well. So at this time, the governments are much more confident that they can take on this work, that they can take on and investigate these cases, and also take them to the logical conclusion. But that has happened because
Monica ji, there is a request that your voice is not very audible. So can you keep the microphone near you?
Okay. I hope I don't have to repeat everything. No. Okay. So the good. Can you hear? Is it better now?
Yeah, better.
Okay. So given the current state of cooperation, I think governments are much more confident about pursuing the cases that are revealed by these things. Criticism also comes, and I guess this is what I can say is this is probably not the last leak. This is not the first one, but this is also not the last leak that is going to happen. One thing that you would, at least I have noticed, is that what the leaks reveal is that this is not just about tax evasion. We are looking at it from the angle of tax evasion, but this is not just about tax evasion. It's about money laundering. It's about financial crimes. It's about corruption. And a lot of the focus that has been there by the ICJ has been about corruption. And I think all governments and policymakers do realize that not all of this money is as a result of tax evasion. Every account abroad is not an illegal account or an evaded account. So jumping to preliminary conclusions without investigations is not sensible and not right as well. And I guess it infringes upon taxpayers' rights also. Before I close, I think we'll be coming back to the topic again on the issue of stolen data. I think I'll let Mukesh speak about it and then come back and give the perspective of the Global Forum also on the issue of stolen data. I think he will introduce the topic. So I'll pause here, I guess, and then we'll come back to the topics again and again.
Thank you. Thank you for the overall perspective of the international actions being taken. Before we proceed, can I request Mukesh that he gives us a brief presentation about the Pandora Papers and what exactly it is and how it is going to affect taxation of these people and what has been leaked and who are the affected people. So over to you.
Sure, thanks. Nilesh, how much time do I have?
You can take 15 minutes.
Okay, sure. Thank you. I'm going to just try and share a presentation which I had put together. We were not planning to use this presentation, but let me see. Okay. Can everyone see the presentation?
No,
Can't see the presentation. Just give me a minute. Huh? I don't know whether I have the sharing rights. Just try. Nilesh, can someone share the presentation or should I just go ahead?
You have the right to share the screen. So once you click on share screen, so you will be able to show your people.
Yeah, when I click.
I think now you should get the right to share your screen.
Is it okay now?
From the way.
Yes, sir. Yes, sir.
Perfect. Thank you. Let me just convert this.
Can you cancel and reshare?
Yeah, this thing has become a little slow. Just give me a minute. My screen has got held back. Am I audible?
Yeah, you're audible. Can you see what is the issue?
I think all of you are frozen. So either my network is weak or I can't see any one of you. Nilesh, can you just give me 2 minutes to fix it and I'll be back?
Yeah. And in fact, TP has got your slides on his iPad and he can share, but provided you cancel your share.
Yeah, sure. This is what happens when you're underprepared.
But then I don't know whether it is Okay. Mukesh, we can now see your screen, but we can't hear you.
Mukesh, we can see your presentation.
Can you see me now?
Yeah, we can see. Yeah, yeah.
Can you hear me now?
Presentation mode. Right now, it is in the PPT mode. Yeah. Okay.
Okay.
Yeah. Finally, technology is behind us.
Let me just adjust the volume. Just give me a minute. Okay, so this presentation was something that we had done it more for how we are going to organize our panel initially, but most of it doesn't hold ground. What we intended to cover is what have been the various data leakages that have happened since Pandora, since Monica ji mentioned about the LTG, the first data leak that happened. But more importantly, we wanted to focus how revenue is focusing on the stolen data and to what extent it can be used, and what are the courts talking about it. And there are many variables that have been laid down, particularly by the Swiss court and many of the European court. It does matter where the stolen data originates from. Is it followed by any credible exchange of information under the treaty, so on and so forth. I'm not going to focus on what the OECD and UN is doing, because that's Monica G's territory. I think she laid down a brief outlook. Then we may want to focus a little bit on what's happening in India, so on and so forth. So the history of the leaks is old. I mean, it's as old as 20 years now. The Liechtenstein Global Trust Group, which is also called the LGT affair, is as old as 2002. This is the time when the authorities secretly discovered that data relating to rich, UK, Brits, Germans, and Americans were stolen, and that they were involved in major tax evasion. About 1,400 clients were discovered. And this happened because a former data entry clerk had spawned one of the biggest private banking networks. So that was the first one that happened. Thereafter, as we say, is history. Every year it's been happening, and as Monica G correctly pointed out, the Pandora being the latest one. But since 2014, we have seen, and I think if I'm not mistaken, it is around the time that the Lux leaks happened that the OECD activated, anticipated, was looking into the future and felt that this is going to be an ongoing affair, and came out with a host of policy measures for a country to look into. Now, there are two important questions that arise purely from a taxpayer's right perspective. So, we'll have the policy perspective. We will look at what the guidance to the governments are on such data. But equally important is, what is the validity of the stolen data, and are taxpayer rights in any manner getting breached? And can the data be used for information requests? And in information request situation, what is the legal sanctity of data from the point of view of country that is acquiring the data and using it? And then how does it align with the spontaneous exchange of information under the tax information agreements? And then the second question that arises is the data that is and the requested information can be used to determine not just the tax liability, but also any criminal liabilities depending on the jurisdiction in which this data is used. So there are various forms of guidances that have come out either by the courts or by the tax administration. And what we have concluded is that there are three important imperatives over here. One is the country where the stolen data originates from. Second is the country that or the government that uses the stolen data. And third is that under the domestic law of the country which uses that data, how is that data procured assumes significance. Interestingly, Switzerland, and unsurprisingly rather, has been at the center of debate. And it's interesting to see how the view of the Swiss Supreme Court has changed over a period of time. Understandably, when this issue came up for the first time in 2017, before the Swiss Supreme Court, it straight away refused to exchange information with France. And at that point in time, the prominence of banking secrecy law is what guided the Supreme Court. However, in 2017, a very interesting perspective came up. This was a data that was provided by the French employees of the Swiss branch of a Swiss bank. So it's a Swiss bank which has a French branch and it has a French employee. And the French employee provided that data. To that, the Swiss Supreme Court said that information request based on stolen data in France, so now the jurisdiction becomes important, is legitimate and legal. So this is very interesting. It distinguished its earlier decision where they said they refused the information on the grounds of banking secrecy. But later on, the Swiss court talked about the use of data or the request for information exchange. In 2018, something even more interesting occurred because India was involved. So here, India requested for Swiss leaks information. To that, the Supreme Court said that there is no prohibition as such to what they call it as a passively obtained stolen data. And a passively obtained stolen data would mean that India has not obtained the stolen data. In this situation, interestingly, India requested for this information, and the Swiss court held that unless the requesting state has signed an MOU with Switzerland, which commits for not using such information, the sharing of data is valid. Here, interestingly, France was also involved because the request actually went through the French tax authorities. I'm not going to get into the LTG first 2008 because at the time of LTG, the request for information under the exchange of information was straight away refused. Now, we just tried to put out this in three baskets. Where do countries really stand on stolen data? And the focus clearly is the stolen data. So what you see on the left-hand side is countries through their policy or through their courts have allowed use of data. Countries in the middle, which have said no for use of stolen data. And then on the right-hand side, you have countries that have had a mixed approach. Now, all of this are detailed cases. It makes very interesting reading. I'm not going to go through the slides in its entirety, but the Glencore case in Australia is often spoken about. So what happened was that the Australian tax authorities used the Australian Tax Administration used the stolen data and carried out adjustments in Glencore. And Glencore took an argument before the court on a professional privilege. So there is a legal privilege and there is professional privilege. And to that, the court said that Glencore cannot seek the professional privilege because at the end of the day, a professional privilege is supposed to be a sword and not a shield. So it negated it. The Belgium Supreme Court also ruled that it cannot not necessarily be inadmissible, which means that it is necessarily admissible in certain situations. The UK said that there is no automatic exclusion and the courts have the discretionary powers to exclude it, but the court has to be satisfied that that exclusion is on unfair terms. And then came the situation of Denmark, which said that it is admissible unless there is a violation of rights, I presume fundamental rights. Turkey took a position of no and it said that the general constitutional bars using such data in income tax proceedings, and the Australian, Austria, and the Italian and the German, took a slightly different view. So I just wanted to share this. So here is a quick summary of other forms of situations that can arise. What happens in countries where tax authorities pay compensation to seek data? Does that become legal just because it is paid for it? In Netherlands, information was brought by Germany and exchanged with Netherlands, and the question arose whether Netherlands can use it or not. But so you will see, in summary, most countries have given a positive for use of stolen data. So just because the data is stolen, that doesn't mean that it cannot be used. The two qualifications, of course, were number one, the unfairness, which the UK court spoke about, and second is the Turkish court, if the constitutional rights are getting violated. I'm not going to go into the financial secrecy, neither I'm going to talk about the OECD, because Monica ji is going to talk about policy moves on JITSIC, so on and so forth. But yeah, over to you, Nilesh. I just thought I'll stop over here and then we can take some questions.
Thanks, Mukesh. It was a very interesting presentation. Monica, would you like to comment on the JITSIC and the other international cooperation?
Yeah, thank you, Nilesh, and thank you, Mukesh, for that broad introduction. You've painted a picture very nicely with regard to how different countries' courts are approaching this issue. So I just wanted to throw a little bit of light on how the international standards or the exchanges per se are being there. Of course, it's linked to some courts prohibiting exchange and some courts sometimes saying it's all right, just as the Swiss courts did. So in this case, I think the issue of stolen data has dogged the international standards throughout the time that the Global Forum started doing its peer reviews. The issue of whether stolen data could be exchanged under the agreement, Article 26, or the Multilateral Convention or not, has been a question of a subject of peer reviews, and I must say of lots of heated debates and battles within the OECD meetings. So having been privy to that, I think the issue initially did come up in the Liechtenstein review, where Liechtenstein had not provided information to its treaty partners, which was predominantly Germany. And at that time, when these exchanges took place, Liechtenstein did not have many agreements. So it was mainly Germany as a treaty partner. And at that time, when the Global Forum found that Liechtenstein had been reluctant to provide their data, I think recommendations were made, and in its peer review report, that is not acceptable or not in accordance with the standards, even though the standards of exchange of information on request do not clearly spell out this aspect. So that happened at that time. When the Swiss report, when Switzerland was being peer reviewed, again, this became a subject of very, very heated discussions and debate, and this whole issue of stolen data, the fruit of the poison tree, etc. It was very, very hotly debated all along, and at that time as well. I think in the initial peer review report of Switzerland, the first one, the recommendations were given to the Swiss government to fix this issue or to be able to provide. And yes, the debates took place whether the recipient country got it passively, did they pay for it, did they actively ask somebody to go and get it. All these issues were discussed and debated, and there are many valid points on all sides, I guess, but where the issue landed was that the international forum did say that Switzerland should be exchanging this information. Subsequently to that, the Swiss government did amend its laws, and the Swiss court, as you just said, in July 2018, the Swiss court also took a view that this information should be provided. So it looks like the pendulum is moving towards a point where, at least countries do exchange this information under their treaties, unless there is a specific, especially in the Swiss listing, there is a specific decision or agreement not to do so. So I have seen the move from completely not providing the data, refusing it, to a stage where now some of the courts are also aligned with the tax authorities there. So that's with regard to that. With regard to the leaks, I think I just wanted to mention also, share that how the international view has changed over the years with regard to each successive leak. And I wanted to share what had happened when the Panama Papers had broken, even though we're talking about Pandora Papers today, but how countries' policies or countries' outlooks change. That is where I wanted to throw light on. That at the time when the Panama Papers leak happened, that was a time when almost all countries had agreed to do automatic exchange of information. They had signed on the commitment that we will do it starting in 2017, and including all secrecy jurisdictions. Everybody had come on board. Of course, US was doing FATCA and not doing the Common Reporting Standard. But the only jurisdiction that was dragging its feet was Panama. So Panama had refused, and Panama said that this is not in our interest. And at that time, the international community was trying to figure out what to do, because even if one country is behind, then all the money will go to that country. And so till every hole is plugged, then you can't have effective cooperation. So at that time, we at the OECD were trying to convince the Panamanian government and authorities to come on board, but we were facing a lot of resistance. And as soon as the Panama Papers broke, in the media, there was a lot of criticism from the OECD, from the Secretary General, from Pascal Santama, that Panama is the only holdout, etc., etc. And under the weight of that criticism, immediately Panama buckled and said, okay, we are also coming on board, and it did come on board. So that is how, I guess, international policy was shaped, that the international pressure was there on all countries to cooperate. With regard to the, I guess, some of the challenges you have with all the leaks that happen, Pandora Papers is more recent, but some of the earlier leaks related to data, which was much older. And at that time, treaties were not there. And the challenges that the government were facing were that they were asking for information from countries. For example, they would ask information from the British Virgin Islands or from Panama about accounts of companies for a certain period. But it was a period when these companies was not even required by law to maintain accounts. And that also led to several battles and frustration amongst countries, where the countries that were asking for information said, you're not providing us, and they said that you're asking for a period when it wasn't even available. So this has seen a kind of evolution over a period of time. And to my mind, and from what I have observed, I think the environment has gotten better for tax authorities, no doubt about it. That over a period of time, the rough edges have been smoothed. There is a better interaction and cooperation between governments. And what initial years from, say, from 2013 to 2015, the kind of frustration, the kind of tensions between governments you would see at that time had over a period of time become a thing of the past. I'm sure there will be new battles to fight. There will be new issues which, for example, the more recent 2-3 years have been more about beneficial owners, like are we able to get beneficial owners or not? And we do always talk about Switzerland, which actually allowed bearer shares till very recently. They could issue bearer shares. And now they have been given a recommendation in their 2020 report with regard to the beneficial owners there. They don't have. Of course, the US is always a country which is always difficult to tackle because they didn't have beneficial ownership information either. But that's where things are. It's an ongoing challenge. To me, I think the stolen data issue has moved out of the realm of international cooperation unless a court blocks the grant of data and passing on of data. And the issue of now the use of data in tax proceedings, or whether for criminal or with this thing, that as court cases come up more and more in courts, I think that will take its own course. And countries are changing laws as well. As I said, Switzerland actually changes laws to allow for exchange of information on stolen data as well. So there, apart from these two countries and the countries that Mukesh you had mentioned in the slide, more or less most of the countries do not object to sharing information based on leaks, and they are able to provide. The roadblock that I see is that sometimes they don't have that information because the company is closed shop and company is not there. Nobody is available to give that information. So that is more of a challenge rather than legal challenges there. So I think I'll stop here, and we'll probably come around to some other issues and other aspects in a while.
Thank you, Vanajaji. And coming to the other two panelists, so far as Indian taxation is concerned, in respect of black money or money which is concealed, the interpretation taken by the courts earlier was highly technical, going by the commas and the full stops. But now it seems the view is black, and regardless of any number of whitewashes given to it, if it is black and the judge knows that it's black, he will try to find a to tax it. What do you have to say about that, Mr.
Well, that is the interpretation by the tribunal so far. But rightly so. What is black has to be black. Not different. So what Black Money Act in India was introduced, in fact, one of the unique acts, let me give you that Indian law. Then thereafter I can talk about it, because they cannot found instance of similar law anywhere. There are countries, for example, Japan having disclosed assets worth between more than 100 crore, which was found in India. Found in India, and he was a non-resident, settled in Japan. Now, Japanese authorities have taken a view that there is a limitation of law period applies in Japan. 5 years income can only be disclosed unless in the last 5 years deposits have come into that account. The deposits were all prior to 5 years, so therefore they only taxed it in respect of the interest earned in the last 5 years. So we have introduced unique law in the world, and therefore it must be respected. In 2015, we created a separate statute, despite the fact that we had the provisions under our laws also that we could have taxed to the extent of the amounts which were found during the limitation period. Now, this limitation period we have abolished as far as Black Money Act is concerned. Though Supreme Court has interpreted this limitation has to be inherent restrictions should also be applicable. So that has to be seen. But Black Money Act, which we introduced in our country, is most stringent law, and in fact is also, if applied seriously, it is going to be major revenue earning for the government. But look at this. We have introduced Black Money Act. We have got the definition of non-resident. We have said that it will apply to a non-resident. We gave a window of opportunity for the taxpayers who have been caught, that you can come forward and disclose within 3 months from 1st July 2015 to 30th September 2015. And thereafter we said nothing doing. And how many disclosures we got it in that period? The experience shows very interestingly in that period of 3 months we got 618 disclosures, 4,100 crore rupees asset disclosed, and 2,470 crore rupees tax and penalty we collected. Though, therefore, if you look at that, today's figures which have been published yesterday in the newspaper, up to 2021 we have collected 20,000 crore disclosures, and on that we have collected tax, etc. India became very strong proponent of transparency and automatic exchange of information for tax purposes, and pushed G20 countries and exert pressure on those countries. India, in fact, is a very pivotal role played in this particular aspect. And Mr. Modi himself was attending one of the meetings, and he said normal exchange of information should be converted into automatic exchange of information. And that has started. But the fact remains that we amended the law retrospectively. The definition of taxpayer has been changed. Now non-resident was excluded. Now you say non-resident is excluded, but during the period when he was resident, and the stashing of the monies are kept abroad was done during the period of residency, it will be covered by black money. If you cover it like this, when original law was introduced in a particular manner, why should you not create another opportunity to the people? People have now realized what is the importance of this black money and the law of the black money. So they would have voluntarily come forward and given an opportunity of 3 months, another 3 months, so that people would have come forward and made the disclosures, so that you are not caught unaware. So this would be a fair play game. And now another point which possibly was discussed in by the earlier speakers, that the government has been purchasing the data from the stolen data from the persons who are doing the job. It means we are promoting the stealing of the data. We are purchasing the stealing of the data. I remember Mr. Palkhiwala saying, people get the government they deserve and the government get the people they deserve. So therefore, don't adopt the practice of stealing. As a good government, your job is to take the data officially and then use it for purposely. Once stolen data is taken, no doubt, in my opinion, it can be used against the taxpayer, because that is the interpretation today's courts have taken, and rightly so. But the fact remains that fair play demands that you should not encourage stealing of the data. And if you are permitting the stealing of the data in this particular manner, I think you will get a bad taxpayer. Then people are there. That is the reason why people are going away from the country. All high net worth individuals have left India. Around 20,000 people have gone out of the country and they have become non-resident. Of course, that is not a solution, because if the crime is committed by them when they were resident, now though they have become non-resident, they still can be caught under the black money. So therefore, we have a very interesting scenario. Black Money Act is 2015. Now what happens, this Pandora's box has opened up the data. You can see 20 trillion data, 20 trillion terabyte data have been captured. Number of account holders phenomenal. 14 service providers names have come in, and they have been caught, and they have been subject matter of the stealing of the data from them or catching of the data, because this consortium of journalists also is doing the same thing. What the government is promoting, you steal the data and give it to us. They are doing that. And not only that, they are also blackmailing the taxpayer. They are approaching the taxpayer that we are sharing your data to the government. Would you like to settle this? And people are settling. This is not the way. You should now catch hold of such people rather than catching the people. Of course, people who have not disclosed, that account should be caught. But the people who are trading in this type of activity, they should equally be caught. And now what happens? In this data which they have got under the Pandora's box, the data are more than of 30 years, 25 years. Will you open up all those cases? This will be genuinely a difficulty. And what happens? Because if suppose your bank account which was opened 25 years before and closed, the assessee has died and legal heirs are now found to be having that account. Now the question is, if you write to the bank does not give you information. I am giving you practical difficulty. If the tax department writes to the other government and other government gets the information, they request the bank. Bank is obliged, and they are obliging to give even 35 years old information. But taxpayer asking, this is beyond 7 years. Some countries say beyond 10 years. Some countries say beyond 5 years. We cannot provide any information to you. Now that thing, it is a war between two rivals without one having no weapons and other having a weapon. If the tax department obtains the data from other countries' banks or any other taxpayer or any other authority, fair play demands that you give the data obtained from the sources to the taxpayer, all Xerox certified copies, and then confront the taxpayer. Is this your data? If it is yours, why it should not be taxed? And that is rightly, and there will be least defense available to the taxpayer to defend their cases if the data are shared with them. And my experience shows, you go to the tax authorities. Now we have recent decision in the case of Bansali. The judge has written the history of the interrogation of the taxpayer, and that interrogation reveals clearly that the taxpayer was lying, absolutely. And at the last minute he disclosed, yes, I had that account. Now, my experience is when the department gets all the data, they share the information partly with the taxpayer only on the last day. What is the accountability of the department in such cases? Why don't you share the information when you got it? Because once you have got the information, we are saying, I am of the opinion it must be, they are entitled to use that data. But that data should be shared. You should give an opportunity to the taxpayer. And not only that, they use it against the taxpayer. If the joint account is there, they use that information in both the accounts and they harass the taxpayer. And they make double addition. So these are the problems. Problems are fair play is not there. And if there is a fair play, in my opinion, the dishonest taxpayers must be taxed. And fully the tax should be recovered. Penalty also should be recovered. But it should be in a fair play. It should not be in a dishonest. This is one.
Mukesh, would you like to add or give your own comment on what was discussed?
Yeah, so I mean, right now there are 3-4 interesting cases that have come up before the tribunal, actually Supreme Court as well. The Gautam Khaitan case in Supreme Court essentially dealt with the fact that if the Black Money Act was, received the President Accent in May and its applicability was made from April 1, 2015 by way of a notification, whether that was valid or not. The Delhi High Court said that it could not be said to be valid. The notification cannot bring into effect a law retrospectively. The Supreme Court reversed that decision of the Delhi High Court. So the Supreme Court, with a detailed reasoning, went into the interpretation, which is the purposive interpretation, or what the Bombay Tribunal in the recent decision that Mr. Ostwal talked about, you have to look at the intent of the law rather than giving a literal interpretation. Now, I don't want to get into this, definition of literal interpretation rule, strict interpretation rule, or rule where you have to look at the intent of the legislature, because there is a whole lot of jurisprudence on rules of interpretation. But in all the rulings where the court has affirmed either of these principles, literal interpretation rule, strict interpretation rule, purposive interpretation rule, purposive where you have to look at the intent of the law, of the lawmakers, all of these decisions have been contextual. It is not that the courts in India have said one rule prevails over other, or one rule is primary and second rule is secondary. It is all contextual. In the context of Black Money Act, if I read the trend of decision, particularly the detailed decision by the Mumbai Tribunal in Rasiklal's case, to me it seems that the judiciary also would look at the underlying purpose of the law and rather not give benefit to the taxpayer. So in the recently concluded Mumbai Tribunal decision, though there were 6 important questions that were framed, essentially it boiled down to 2 things. Number one, that can you make a disclosure of an asset that doesn't exist on the day the Black Money Act came into existence? So here is an asset which fell in the Black Money Act, but on the day on which the statute came into effect, the asset did not exist. This is one. The tribunal has gone into detailed reasoning, has written a fairly large commentary on all the facts and findings of the lower authority, including its own findings. But it has interpreted the law solely on this one word, whether it is an asset or it was an asset. And it has given a definition that the word is asset should be read as was asset. So you don't need to look into whether the asset the fact that the asset did not exist at that point in time is meaningless. In fact, there is a CBDT circular, a list of FAQs that were issued. And in the FAQs, it seemed that a person who's a declarant who wanted to disclose a foreign asset, could he have disclosed an asset which did not exist on the day the law came into effect? And the CBDT circular says that the question of disclosure does not arise. And the SSE's counsel did argue this point. But the tribunal negated that point by saying that if you follow the purposive interpretation rule, if you look at the intent of the lawmakers, if you follow the Supreme Court decision on how the word is to be interpreted as was in certain situations, this circular is of no use. So I think if I have to take these trends of decision as a criteria, I would be very cautious and in terms of advising clients on aggressive positions, because insofar as the use of so-called stolen data or data which was originally stolen but secondarily procured through valid exchange of information under the treaties, I think that this becomes a very, very difficult situation for taxpayers. The other aspect that I wanted to point out is that the power to make an assessment under the Black Money Act is far more wider than the power to make an assessment under the Income Tax Act. So Section 10 of the Black Money Act makes a very interesting read. It says, for the purpose of making an assessment, the assessing officer may, on receipt of an information from an income tax authority under the Income Tax Act, so information on income tax under the Income Tax Act, or any other authority under any law for the time being enforced. Ostensibly, this is an Indian law. So if there is any statute, Indian statute, and that statutes generate information, and the regulator of that statute shares the information with the tax authority, that can be used. Or there is one more category, or on coming of any information in his notice. Now this or on coming of any information to his notice is where the challenge is. To me, it seems that the manner in which this has been worded, a stolen data can be used because it will fall in the category of coming of any information in his notice. So if there is data that is leaked out, I think that the officer would seek recourse to Section 10. Interestingly, the income tax statute through a CBDT notification, which was last updated in 2018, has a policy called Income Tax Informants Reward Scheme. This reward scheme was formulated in 2007 and it was revised in 2018. This reward scheme, in my view, which is dated 23rd of April 2018, is a code in itself. It basically talks about whistleblower protection for the informant, rewards to the informant. But what intrigued me was that this scheme has better checks and balance than the checks and balance under the Black Money Act. So the word information has been defined in the CBDT circular. It says information includes any material, blah, blah, blah. But then there is an explanation which says information given in any other manner, such as WhatsApp, SMS, or phone, or post or social networking site, or publishing letter in a newspaper, or any other media, shall not be treated as information. So in other words, the checks and balances in the 2018 Informants Reward Scheme is far more better worded than the manner in which Section 10 of the Black Money Act is worded. I think Section 10 of the Black Money Act could be, in my view, misused, but this scheme is far more better drafted. So I just wanted to share this perspective on the term information, because that becomes very critical from a black money law perspective. Thank you.
Mukesh, in the context of this black money and the various schemes of operations of the schemes, it is generally found that there are certain service providers who first develop a scheme and market it to the gullible businesses, and who, for want of proper knowledge or proper understanding, or maybe getting tempted by some short-term gratification, uh, get tempted and go into the scheme without realizing the consequences. And the service provider assures them that don't worry, everything is legal, and they will earn it with so and so different they are throwing up. So, can a businessman, when he's caught unaware, can he claim that I was taking the advice given by the service provider at face value and I was innocent? I was uh, sort of forced to go into this scheme because I was told that it is a very good scheme and many people are going for it. But otherwise, I am an honest taxpayer. Other than this transaction, I have paid all my taxes honestly. Is that argument possible?
I would like Monica ji to share her perspective, and I will add to it. The reason I wanted her to share perspective is because she, as working in the OECD, would have experience as to what is OECD's dicta, well, not dicta, OECD's guidance rather to countries on responsibility of intermediaries and service providers. I can share Indian perspective and very general perspective, but Monica ji, over to you.
Monica ji, before you share your perspective, can I ask you further one more supplementary question? Is OECD working on this particular project, that any intermediaries who are helping the taxpayers to open such accounts or stash the wealth in the accounts abroad, not in their own country, they should equally be punished, or some penalties in their jurisdiction under some common law or some specific law should be levied? They should be blacklisted, something like that.
Thank you, Mukesh, and thank you, Mr. Ostwal. I think the questions are kind of complementary to each other. Is what are the liabilities and responsibilities of service providers in this regard? And Nilesh raised that question. I think on this point, one thing obviously is clear in that most countries, the taxpayer is definitely liable. You know, he's signing, and then that issue of that I did it in good faith, I don't think that works. I have not come across very many countries where that is a valid defense. It is. It's not in India. It's not in other countries. As far as the role of the intermediaries, the professionals, the service providers are concerned, whether they are CAs, whether they are lawyers, whether they are other service providers who help to form companies, I think over the past few years, their role has come out more and more and more into focus. It may not have been such 5-10 years ago, but I think more and more, especially with the leaks, I think everybody heard about Mossack Fonseca and the arrest of the service providers there. There is no particular, I would say, requirement that the OECD has made, but yes, there is work going on both at the Financial Action Task Force, where the roles of service providers in money laundering and promoting these activities, there have been certain guidelines issued by them with regard to that. And the OECD, in its work on tax crimes, there is a branch of work which relates actually to tax crimes. There, those are not, I would say, enforceable standards in the way the Exchange of Information standards are. But yes, OECD has issued guidelines or recommendations on coming on harsher with regard to service providers who are creating the schemes and then marketing them. I wouldn't say to gullible taxpayers. I don't believe the taxpayers are that gullible, but it is, unless these schemes are created and put in place by different service providers on their own, the taxpayers may not be able to implement them. So the feeling or the general view of the international community is that something needs to be done, or something harsher and stricter needs to be done to fix that responsibility. And I also wanted to touch upon a little bit, Mr. Ostwal was mentioning about the rights of the taxpayer vis-a-vis data, etc., and the fairness to the taxpayers. I think a lot of these leaks that are happening, sometimes you can call it stolen data, but other times it is just whistleblower. It's a whistleblower. You can call him a thief or a whistleblower depending on which country you're in, and it's usually called stolen, but it's also the people who are taking out the data, especially if they're not charging money. This is more of a whistleblower kind of thing. I think that going forward, we will probably see that as better information exchange happens, especially automatically. I will talk about exchange of information on request, because on that, the tax authority has to have some information in their possession to be able to make that request. And if that information lies in the other country and they don't have it, then how do they make that request? It's a catch-22 situation, because you have to establish foreseeable relevance. You have to have something in your possession to be able to ask for that information. And so there is the challenge lies with the exchange of information on request, even though its scope is very wide and they can ask for anything under that. So there is that scope of expansion of automatic exchange of information. For now, that is there in the context of financial accounts and financial assets. But as taxpayers see that this information is now going to be reported, you will see a trend of taxpayers moving away, if they want to conceal their assets, to other kinds of assets which are not presently reported. For example, they might move away to immovable properties which are not currently under the regime of reporting. In fact, I noticed with the headlines of the Pandora Papers that a lot of that was concentrated focused around immovable properties, whether they were properties or villas that were purchased by the Czech Prime Minister or the King of Jordan or many other. There were issue of purchase of 1,400 properties, immovable properties in UK through the offshore companies. So you might see that the assets will move away, but and then these leaks will continue to happen. So to me, the way forward, at least for authorities, is to expand the scope of automatic exchange of information. And there may be isolated cases where, as you said, the heirs did not know of the bank account, etc., etc. But these are not the norm. They may be peculiar cases. But in general, the taxpayers have an opportunity and an obligation to declare their accounts. And there was the amnesty scheme as well before the Black Money Act came into force. The issue always, again, from policy perspective, is the timing of such voluntary disclosure programs, the rates at which these are offered, and the time period for which they're offered. And these have various considerations which different governments take into account. I think you mentioned there should be another such voluntary disclosure program like that. And different governments do have to weigh in many different factors, because too early you bring the program, it may not work well. If it's too late, it may not work well. The rates are too high, it may not work well. Too low, you don't get the revenue. So the policymakers have to be very, very careful in drafting such programs so that there is a maximum effect of getting the revenue that they need, of giving the relief and the opportunity to the taxpayers that is very essential, and also at the same time put in place a very harsh then enforcement regime, because if after all the opportunity the taxpayers don't come forward, then you're just encouraging non-compliance. So those that don't come forward, then that needs to be dealt with quite harshly, and you have to have that ability and the enforcement power and the investigative ability to be able to punish those who are, despite all the opportunities, recalcitrant. So I'll stop here, and then if there are further questions, I think we can always come back.
Your take from the Indian perspective?
Well, I think in general, the focus on intermediaries and service providers has been increasing, not just from the point of view of tax, but also from the point of view of other economic laws. If we simply look at the provisions on penalties and prosecution and how they have gone through successive legislative amendments, at least in the last 8 years, the responsibility is much more on the service provider. If we look at other economic offenses, who are considered as experts, even under the 2013 Companies Act, which says anyone, beyond the auditor, anyone who's providing a view, whether from a law perspective or from a valuation perspective would be considered as an expert. And if he's an expert, then he's liable for offenses under various provisions of the Companies Act. So I think this legislative development is one part of it. On the non-legislative side, I think professional services bodies are getting active. I recall that in 2017, Mr. Jaitley, in his capacity as also responsible for Ministry of Corporate Affairs, had set up a empowered group, and ICAI was the nodal agency, but his view was that we should bring together the two other institutes, which is Institute of Cost and Management Accountant and Institute of Company Secretaries. And for all these three institutes to review what are the disciplinary proceedings, how effective those disciplinary proceedings are. His mandate was in the Empowered Committee to bring together cohesiveness, because these three institutes, besides other professionals, comprise the cream of our Indian professional services firms. And whether these three institutes are aligned on what kind of disciplinary action should be taken against errant members. So it did not specifically get into tax as a subject, but it was more generally. So, so you are seeing many legislative developments, and then you're seeing, the professional standards body also upping the ante insofar as actions or responsibility of professionals are concerned.
While on the service providers, under the BEPS Action Plan 7, there was this mention of the mandatory disclosure rules, and some countries have this policy that if you pay your consultant more than a certain amount of fees, then whatever advice is given by that consultant has to be shared with the revenue. That sort of rules are prevalent. I am told they are prevalent also in the USA and also few other countries of Europe.
But not mistaken, those is not based on fees. It is based on any tax planning technique which you have not questioned the advice. That has to be disclosed. The UK has a law. But the question is, what, the definition of what is the tax planning advice which you have given. Now, in the context of India, the tax planning advice, if you look at the question SAR has come in, all those are subjective matters. Difficult to really, what sort of a disclosure you expect from the tax, that the consultant to make of this tax.
So there will be a huge deluge of disclosure, and the revenue will be big.
What OECD standard on this subject is, at least that perspective is up to them. Yes, madam. Can you just throw light on this concept? You are on mute.
I couldn't hear very well. Can you repeat the question?
Some countries have this mandatory disclosure rules that the consultants have to disclose their tax planning advice given to their clients. What is the OECD view, and whether you see that India will likely to have such rules?
I think this is part of the OECD's BEPS action plan. So it is there for countries to implement. I don't think it's part of the mandatory requirements, but it's there because all of the action plan items are not compulsory for all the countries. But that said, I mean, whether India should implement it or not, that's a separate question, and that I will not address here. But I think that these guidelines that are issued by OECD are again as a result of what I say was the perception that that we need to be, holding the service providers also to account with regard to that every information the tax authorities cannot have access to or cannot gather. So the move towards more and more declaration voluntarily is what is part of this recommendation. So regarding India's position, I would not be able to comment.
Okay. Now that brings me to the another question which that you will address from the international perspective, that there is a confiscatory tax rate of 60% plus interest plus penalties plus threat of prosecution. And as Mr. Ostwal mentioned, there was a retrospective amendment about the scope of who is covered under the black money law. Whether there is any need to have another amnesty scheme or some sort of a scheme whereby the taxpayers may get one more opportunity to pay the taxes and buy peace and come clean. Madam, you're on mute.
As I said, can you hear me now?
Yeah, yeah.
As I said, in the advent of such harsh financial laws, including the advent of automatic exchange of information, and for some countries, a lot of harsh laws to punish tax evasion, especially in the garb of assets held abroad, the OECD had, I would say, issued certain parameters for voluntary disclosure schemes, which countries could consider, and it also issued certain policy considerations that the country should keep in mind when they design or when they bring about such programs or amnesty schemes, whatever you want to call it by different names, depending on what the structure of that is. So as a result of that, many countries did bring in these programs. Many of them did, and all of them were very differently designed, differently timed. And to me, yes, the timing of it is very important. You bring it too early, then taxpayers don't know and they are not aware, and you might not get the results you want, and you can't leave it too late as well. So whether there is a scope of another one, I think it's for each country to determine that. If they feel they have given enough opportunity and enough time, they may not consider having another one. So I would avoid making a direct recommendation, because it depends on case to case and country to country, and the rates also. What kind of rates are there? If they're high rates, you will again not get a response. The taxpayers will always see the risk-reward ratio. They will see what is the risk of getting caught later on versus the rate that they have to pay under the disclosure program. So they will make their own calculations, and similarly, policymakers have to make their own calculation as to how do they hit the sweet spot where they encourage the taxpayers but also not send the wrong message to compliant taxpayers. And so that's a tough call, and countries sometimes get it right, sometimes they don't get it right. But a blanket recommendation that yes, there should be another one, it's hard to make, I would say.
Mukesh, would you like to comment on whether there is a need to?
Well, let me take a wild guess, or rather speculate. If I rephrase the question, what is the probability of some kind of an amnesty coming back, which will look similar to the Black Money Act? I'm willing to put my money on it. I see highly unlikely. And it is highly unlikely because purely from a public policy perspective, there is already a host of the past directives of the Supreme Court on any form of amnesty, which I think the Parliament would be extremely concerned about. Second, more importantly, sufficient opportunity was given. FAQs were issued on time. The only thing that I felt I was critical of the 2015 Black Money Act was that the window was too small, the July to September window. And like it happens in any other amnesty scheme which gets extended, everybody was speculating that it would get extended beyond September. I think that did not happen, and hence the response was, I would classify it as feeble rather than an resounding response. The second thing that we must remember is that, and where India is in a very different situation compared to other nations, is we have exchange control laws which are aligned to the most dreadful forms of economic offenses. And our Black Money Act was very carefully worded, and if you go beyond the foreign exchange FEMA law, we have a host of regulations from prevention of money laundering to Corruption Act, so on and so forth. All of these were carved out as exceptions under the Black Money Act. And it's common knowledge in India that many of the unaccounted money which is in offshore do not necessarily belong to people who have merely violated the tax or the exchange control laws. In the process, they could have violated some of the other economic offenses, including in particular the Prevention of Money Laundering Act. In fact, when the government legislated the Fugitive Economic Offenders Act, that was also put in the red category of economic offenses in India. So we have to bear in mind that our Black Money Act, besides having a short window, had many, many exceptions carved out. And hence it should not be surprising that the response was feeble. But I just don't think that there would be any probability of government coming out with anything else. And I'm speculating, and I'm just making an intelligent guess over here. I could be wrong. But since you asked that question, I just thought I'll place my views on record.
But possibly the intention of the village was to find out amnesty. Amnesty does not mean give concession in the tax rate and penalty rate. You levy the same tax 30%, levy the same penalty 90%, so the 120% tax is collected on the black money detected now, and the person makes a voluntary disclosure, giving another window, and then possibly those who have yet not been caught, they can also come forward to make a disclosure and then get out of it. Only what they are saving is a prosecution, and that is definitely a welcome scenario. And I don't think it comes in the way as far as Supreme Court or any other matters are concerned, because you are collecting taxes more than 3 times, and therefore and otherwise, honestly speaking, government has no ability to collect these taxes. The revenue officers cannot go out of their cabins and get the taxpayers to detect this. It is only coming through the Pandora box type cases where the tax collection is coming, where the information is coming, and that's why you are catching. I think it is all fairness. One opportunity, or time to time an opportunity of this nature, making full recovery of tax and penalty should be welcome scenario, rather than just, we do not have jails also in the country to accommodate so many taxpayers if we want to prosecute, because that will take 20 years time to successfully prosecute somebody, and you will be spending huge money, spending good money for a bad cause. So I would take the view that opportunity giving is not an unwelcome scenario, it is a good scenario.
Interesting.
That brings me to another aspect, that the Indian experience of taxation of such persons who are named in this global league. Sometimes the league is about financial assets, sometimes it's about non-financial assets. The revenue as well as the judiciary faces several challenges in deciding what they know to be right, but to actually put it on paper as that it is right and it is taxable. There are time limits for reopening. There is question of reliability on stolen data, identifying the trail of funds. There are opaque structures. Somebody was advising that you put one Red Cross as one of the beneficiaries in a discretionary trust, so you are a non-resident, and therefore whatever you do is possible. Or credit in a non-resident's bank account within a few days of him becoming a non-resident. All these questions pose serious challenges to the revenue and to the judiciary if they want to succeed in taxing such amounts. And
Nilesh, 1 minute. Nilesh, you're not very audible. There is a crackle in the mic, so if you could come closer. Yeah.
Okay, I will repeat. The revenue as well as the judiciary faces several challenges in. Am I audible now?
Better, yeah.
Yeah. The revenue as well as the judiciary faces several challenges in taxing the black money. There are limits on reopening of assessments. There are questions about reliance on stolen data, identifying the trail of funds, you just impose one Red Cross Society as one of the beneficiaries of a trust and say that it is a discretionary trust. It is not a specific trust. And a credit in the non-resident's account immediately after a few days of his becoming a non-resident. All these are challenges which the revenue as well as the judiciary, even if they know that this money is black and it should be taxed, they have challenges in actually taxing it and recovering the taxes. And there are other impacts on different laws like FEMA, Prevention of Corruption Act. So how does one actually draw the balance on what can be achieved by the revenue as well as what can be accepted by the judiciary and the right amount is taxed? On another aspect, the black money law sometimes creates a hardship for a genuine taxpayer who has remitted money abroad under the LRS scheme or under the ODI scheme. Even he sent notices and he has to reply to all the notices, even though whatever he has done is purely legal. So where do we strike the balance? That is a point which we can consider. Can I request Mr. Ostwal to start with?
The issue which you have explained about the discretionary trust, let me give little explanation on this subject. In the case of Maharaja Vikram Singh of Gondal, Supreme Court has defined this term, discretionary trust. Discretionary trust is one which gives a beneficiary no right to any part of the income of the trust or a property, but vests in the trustee of a discretionary with a discretionary power to pay him or apply it for the benefit of such part of the income as they think it necessary. The trustees must exercise their discretion as and when the income becomes available, but if they fail to distribute in time, the power is not extinguished so that they can distribute later. They have no power to bind themselves for the future. The beneficiary is thus, this is the most important, beneficiary is thus has no more than hope that the discretion will be exercised in his favor. Now the example which you are trying to give is that you have created a discretionary trust and there is a beneficiary like a Worldwide Fund or some charity as the beneficiary, and thereby you have hidden something from the world that it is not given to you, and later on when you become non-resident everything is given to you. That the challenge will be in such scenario, you should challenge who has exercised this discretion and interrogate them rather than asking discretionary beneficiaries receiving something. I believe that is the constitution of discretionary trust. If you understand the Supreme Court decision, I think you will have no difficulty in understanding the principle behind the discretionary trust. It means you will be asking the world to rewrite their laws on the discretionary trust. What you are talking about.
But one knows that this is just a camouflage and ultimately it was somebody's own money which is...
If it is a camouflage, if it is a sham, you prove it is so, then he should be punished fully.
That is where the challenge comes.
Then you remove the facade of discretionary trust and tax him from beginning. I would take that view.
It's difficult for the revenue to do that also.
That is the reason I said you must have a disclosure scheme. Make people disclose, pay the tax.
And
Come clean.
Mukesh, you would like to add?
Well, I have kind of expressed my view. I mean, I don't see the probability of a new scheme coming in, so this could be academic. We also have to remember one important thing that we normally don't discuss in this debate, which is what is the public policy stance? What are the pressures that civil society put on politicians on some of these issues? So if you simply look at what the likes of Tax Justice and Oxfam, the data that they are throwing up, the comments that they are making, actually, if you look at if you Google Pandora's Box and LuxLeaks, you will see many statements made by these bodies. Now, all of these do have a profound impact on the lawmakers and on the civil society as well. And that, in my view, also guides the politicians on the policy stance. So the policy stance of any government is not dependent on what we as professionals who defend taxpayers or tax administration feels or what the judiciary says. It a lot depends on the public sentiment as well.
I think that, yeah, I'll come in here, Mukesh, and I fully endorse what you are saying, because the developments also over the last few years have had a lot to do with the pressure from civil society, as well as the perception of the public, which has changed quite a bit. And there is very little tolerance now of the kind of financial crimes that were the norm earlier. And with every successive leak, I guess the perception of the public gets stronger. And with the exposure of the kind of inequalities that we see, which incidentally have been exacerbated because of the COVID pandemic, you have seen that the richer have become richer and the poorer have become poorer. So a lot of the angst, I mean, in fact, such angst has resulted in coming in of, changing of governments. You have populist governments coming in, and a lot of the focus there is on these issues. We should not forget that the issue of the foreign assets and was a central issue even within the Indian politics, and that was those messages went going around regarding assets that Indian held abroad, which actually was not even true, but that has shaped public perception to quite an extent. And that probably is what weighs more in the minds of policymakers than, as you said, the rights of individual taxpayers, because the narrative then goes that, it's a very sweeping narratives that get built, because most rich people are considered to be, okay, they're evading taxes. So the public sympathy or the narrative is just not there. So the governments do tend to come under I don't know if it's wrong, but I think that's what guides their policy perspective. And also the fact of the loss of revenue, like when you have headlines like so many trillions are stashed ashore, and most of the headlines you will see are that trillions are kept here. So there are studies upon studies of how much money is lying offshore. The OECD had done a study 3 years ago with regard to offshore assets. And that study had revealed that following, signing of exchange agreements, following the coming in of automatic exchange of information, in fact, assets held in offshore accounts had dropped by about 20% between 2008 and 2018. So that narrative, as I said, is very important in understanding. And I mean, who can forget the public picketing Starbucks in UK and all of these, the boycotts that took place, which led to the wide acceptance of the BEPS agenda. Here we're talking about financial crimes, but even the kind of tax avoidance, which is supposedly legal, and these are all not violating laws, even the tolerance for that is very, very low now. It's very low. And what to talk of perception of tax evasion and hiding assets abroad. We do all know that there are various legitimate means for reasons for people to have accounts abroad, and that is accepted. And that is where the whole question of due process comes in. The questioning by authorities of what is the source of the funds and all of that should not be seen as harassment. I would say this is not harassment. This is just the whole process of law taking its course. If it is barring a few cases like legal errors, the taxpayer should be able to explain what this is all about, and hopefully governments are savvy enough to go for the very difficult and very serious cases, and focus on where the expectation of detecting tax evasion is very high. So most governments should have that risk-based approach of looking at things and have a good data analytics to see where are the mismatches and where the possibility of detection of evasion is real. But I just wanted to add that even the tolerance for tax planning globally is very low right now, and the civic bodies or civil societies is very much addressing, and that is where the BEPS project and the acceptance of the widespread acceptance of the BEPS project has come in, and they have been successful also in focusing the narrative on the fact that it's the poor countries that suffer the most. Earlier the whole tax cooperation was mainly pushed by the richer countries. Here was France, and here was US, and there was FATCA, and the French citizens were keeping money in Switzerland, or the Italian citizens were keeping money in San Marino, and the like. So that narrative, which was there in the 2010, and that's where it got pushed by the G20 as well, has now moved to the fact that actually the developing countries are losing a lot, and it pinches them the most. You have all of these reports on the illicit financial flows, especially from countries in Africa, which garner a lot of attention, and so to me that narrative is not going to change very soon. I think it will be there. And yes, if I was to bet about another scheme, I know so Swal is keen about it, I would also bet with you that I don't think another would be coming anytime soon, but it's purely an outsider's guess. I'll stop there.
No, I believe when we are talking about the civil society and the rights of the civil society to protest and all those things, those rules which are there in the international scenario may not apply to a country like India, because here only 100,000 taxpayers pay 99% of the tax of the country collected. Only remaining all are either marginal taxpayers or they are no taxpayers. In a country like India, where the agriculturists are predominantly pampered, and they have been given, the laws have been created for them, the laws are withdrawn for them, the subsidies are granted to them, and these subsidies are not taxed in their hands, and they are not genuinely the agriculturists, and still we are pampering them because of the vote bank. I think this country does not talk of the civil society's rights, and they are talking about the agriculturist rights. So therefore, the rules should be little different. I think that should be also one of the factors which should be considered.
I'll just retort to that, Mr. Ostwal. The only thing I will retort is that when we get all these narratives about only 6% of people or 3% of people paying taxes in India, I think, and this narrative is built pretty much in everything, like whether we are subsidizing students in government universities to this, to that, and look at all of that. I think we forget the fact that when we say this, we are only talking about income tax. But I think every poor person, even if he buys a bar of soap, he's paying taxes. He's paying indirect taxes. So every person in India is a taxpayer. He may not be paying income tax, but he's paying tax on his soap or his toothbrush. And in fact, indirect taxes are much more harsher in their impact because they fall disproportionately. The disproportionate amount of income of the poor people goes towards paying taxes. So this narrative that only a few people are paying taxes and supporting the whole country is kind of flawed in my view. And so that's just the short retort I wanted to say. I think every person in India is a taxpayer.
So, madam, that is the reason why expenditure tax could be a better idea rather than having income tax only.
I think we have had a very interesting debate and discussion and exchange of ideas. I think at the end, let us have a brief concluding remarks from each of the panelists, especially highlighting what are their expectations from the revenue, the tribunals, the courts, and the taxpayers. Monica ji, let's start with you.
Okay, I think from my end, I would say that all these leaks that happen and that take place successively, as I said, this is not the last time that we are seeing these leaks happening. Every such leak exposes the it exposes the narrative, I would say, against the taxpayers who are exposed in these leaks, even though we do recognize that many of them are not evading taxes. But unfortunately, that's the way the penny drops, and that's where the narrative goes. The international cooperation scenario today is such that cooperation is much more easier and taking place right now. I think I hadn't mentioned that earlier, but the Forum for Tax Administration at the OECD is working very actively every time the leaks take place. They have this JITSIC, their forum, which is JITSIC, which has 42 countries, and they work together to investigate specific cases. And after the leak of Pandora Papers, a statement was also issued by the Forum for Tax Administration with regard to what they are planning to do. They don't reveal closely their operations because by the very nature their operations are not very prone to public disclosure. So they have released a statement that they're working on it. They have also mentioned that the OECD standard for exchange of information on request provides a very powerful framework for administrations to receive detailed information, and there are 163 jurisdictions in the world which participate in that. And the common reporting standard, where automatic exchange of information is carrying on between 100 jurisdictions, is also a very powerful tool. What do I see going forward? I think that these leaks have a very, very strong role to play in shaping policies of the governments, in shaping public perception, and obviously the behavior of taxpayers as well. For the taxpayers, I would say what I've always said, come clean as soon as you can. I think, there will always be avenues where taxpayers can now, shift their assets from one to the other, whether it's a movable property, whether it's, artwork or now crypto assets and NFTs. There will always be places, we've heard of taxpayers who buy diamonds and put them in a locker in a mountain in Switzerland. So there will always be places to hide the assets, and the authorities will always try to play catch up to that. But at the end of the day, it's the peace of mind. It is whether you can sleep peacefully at night or not. That's very important. So from a policy perspective, whether it's international or administration, my advice always is to come clean and have a peaceful sleep. And for the rest, those who haven't come clean, I guess you will have the advisors to advise how to go forward with cases that have come out already. And so that's what I would say. I think that the era of hiding things is over. It's not a perfect world today. There are gaps in information sharing, there are gaps in cooperation, but the gaps are closing over a period of time. Thank you.
Mukesh?
Well, I think this is a very dynamic space to be in, particularly if you're a professional. I think that the leaks are going to become more and more frequent. Domestic policies will evolve, so will exchange of information and how it is implemented. I think the likes of JITSIC will even play a more important role, because one of the mandates for JITSIC is a coordinated approach, and India is a party to a JITSIC. So I see the future to be exciting, if I may use that word. And I think if I take Rasiklal Bansali as a well-written judgment by one of the most respected judges, I would say that's just a start. I think there is more to come because this is going to go up further. So I think interesting times for professionals. The only bit of unsolicited advice I would give to our administration is that kindly restrain the use of Black Money Act against genuine taxpayers. I know many people who have availed of the LRS facility to remit money, and they hold offshore assets, and these offshore assets are yielding an income. The response has been mixed. I know some taxpayers who faced a fairly smooth faceless assessment, where they went through the rigor of explaining to the revenue what the sources of those offshore assets are, how the income is getting generated. But I've also heard some, horrifying stories as well. So I think our administration will do well if it supplements the guidance to the black money assets, so that genuine taxpayers, people who pay taxes, are not harassed, because negativity spreads faster than positivity. I wanted to make sure that I paint both the positive and the negative picture, but the but the reality is that the negativity spreads faster. So that's the only bit of unsolicited advice I have. Since Monica ji is on the panel, I just thought I'll take the liberty to make a mention.
TP, you'd like to add something?
See, what Mukesh says is correct. In the name of this black money, genuinely, if you look at the Middle Eastern countries where huge Indian population is situated in staying in their tax laws, and they do not have any rules of maintaining account. When they return back after their retirement from services, they had the bank account abroad, and that has not been disclosed, and that has been found. And they are subject to harassment. Ultimately, they have to go all the way to transfer, and the justice, of course, is done at the level of the family. But in such situation where the taxpayer is genuinely giving all the details, income details, and all my accounts are there abroad, because I was earning salary there and I have nothing to do with it. That should be, and harassment is causing. I think that there should be some law on the taxpayers' rights as well in this country, which does not exist. With this, I thank you very much.
I thank all the three panelists. They had a great discussion, great evening, and we'll sign off now. Thanks all of you. Thank the
Thank you,
participants.
Nilesh.
Thank you.
Thank you, Mr. Ostwal.
Thank you, Mr. Ostwal.